Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Mark Sebastian, Chief Operating Officer of Option Pit, for our weekly update on VolQ, the Nasdaq 100 Volatility Index. Mark, it's great to see you as always. Welcome back to Trade Talks, and give us a quick update on VolQ. Any noticeable trends?
Yeah, we've seen a big volatility suck in the last week. A week ago Friday, volatility was astronomically high, and as quickly as volatility exploded from the meme stock blow up, it came right back out. VolQ is at about 2148. That's getting toward the low end of the entire pandemic levels that we've seen. And it may be heading lower. We're also through earnings season. That's another thing that is going to push VolQ lower. It does have a big effect from kind of the big six in the Nasdaq 100, and they've all reported.
Are you seeing any noticeable differences between the way VolQ and VIX are reacting? Are you seeing the same thing with VIX too, or that big vol suck?
Yeah, vol in VIX has definitely come off, but interestingly, VIX is higher than VolQ, which is unusual. And the reason being is VolQ is telling us kind of how expensive that at the money level is. VIX, which uses the whole curve, is basically telling us, hey, skew is expensive, but at the money options are cheap. So when I see VolQ trading at a discount to VIX and VXN, which is the VIX version of VolQ, it's telling me, hey, maybe straddles are cheap. So for instance, VXN, which is the Nasdaq 100 VIX index, is about 26.5, with VolQ 21.5. So skew, out of the money calls, out of the money puts are incredibly expensive relative to the at the money options in the triple Qs.
So with VolQ, we can trade that CME futures, right? If you're not a futures trader, can you replicate when you're looking at buying in the money straddles? Can you use the Qs or another type of product to capture what you're seeing in VolQ?
Yeah, 100% you can. So when I see VXN trading at a big premium to VolQ, what that's going to tell me is I want to buy straddles and sell wings. So I can do what's called an iron butterfly. And in an iron butterfly, I'm buying a straddle and I'm selling a strangle. So I'm selling it out of the money put and I'm selling it out of the money call. With the way we're set up, that appears to be a favorable spread that I'm frankly going to be looking at as soon as I'm done with this interview, because this just popped on my screen as we're talking.
All right, we'll have to see how that plays out. Mark, thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.